There was a tremendous amount of nervousness surrounding the stock markets even before Russia's President Putin gave the order to invade Ukraine. With issues ranging from the Fed on the cusp of increasing interest rates an unknown number of times and by how much this year and next due to higher inflation than anticipated to geopolitical issues, to put it mildly, investors have been and will continue to be quick to sell stocks and more hesitant. John Butters, FactSet's senior earnings analyst, reported that 95% of companies in the S&P 500 have reported their fourth quarter 2021 results, which were largely positive since 76% of them had earnings above the analysts' estimates with a growth rate of 37%. Even with these strong results, the index has fallen 8% year-to-date and 8.5% since its recent closing high of 4,793 on December 29 last year. Carter Braxton Worth is founder of Worth Charting and frequent CNBC guest. He follows the markets as a technician and was the chief market technician at Oppenheimer, Sterne Agee and Leach and Cornerstone Macro for almost 20 years before recently founding his own firm. In a series of charts he emailed me on Sunday, they show that the S&P 500 could fall an additional 10% and up to 25% based on a head and shoulders and channel patterns. One point to keep in mind is that when there are so many unknowns about the economy and the markets, versus the typical number of unknowns, a larger number of investors than usual will turn to charts to help them invest. Head and shoulder pattern shows potential 15% fall. The S&P 500 bounced back on Thursday and Friday to close at 4,385 and above the neckline of the head and shoulders chart at 4,275. The reversal head and shoulders formation, indicating stocks are exposed downwards, shows the S&P 500 index could fall 655 points to 3,730 or an additional 15% from Friday's close. The chart shows a decline of 545 points in what is called the measured move down from the neckline or the vertical line on the chart. Channels indicate a 10% to 25% decline. Worth's other charts show an upwards trending channel pattern since 2009. While the S&P 500 has pulled back from the upper range, it is showing the index could fall 460 points or 10% to the midpoint at 3,925 or drop 1,085 points or 25% to 3,330 if it were to touch the bottom of the channel. A full-on bear market fall to the bottom of the channel would be extremely painful for investors as it would wipe out all of 2021's gains.